For a look at some of the top moving stocks today, I'm joined by Jenny Horne, markets correspondent here on the TD Ameritrade Network. Airbnb having a little bit of trouble here today. Tell us about the earnings and what stood out to you.
Right, Nicole, it seemed like all the street really cared about was all things guidance, as guidance did come in softer than expected. But in terms of their first quarter, they did see a pretty nice beat on both top and bottom line. So I think this goes to show the theme we have seen with earnings season, and that's that you have to give strong outlook now for the remainder of 2023. They did see first quarter earnings that beat analysts' forecasts with a profit of $117 million. However, the company did warn that its average daily rates are seen falling slightly now in the second quarter compared to the year prior, and nights booked would be rising more slowly than their revenue growth. Revenue was up 20% year over year. Gross booking values was up 19% year over year. The nights and experiences booked also climbed almost 19% year over year, while the company's current backlog of nights is approximately 25% higher than it was a year ago. Airbnb did end the quarter with about $10.6 billion in cash and now expects their second quarter revenue to fall between about $2.35 and $2.45 billion versus estimates of $2.42 billion. So not even that disappointing, but all in all, the fact that they weren't able to give a strong conviction now into these really pivotal spring and summer months, I think is a bit of a concern. They did also authorize a new share repurchase authorization of up to $2.5 billion. So first looking at these numbers, it was really difficult to find what the street didn't like, but I just think the fact that in this travel environment, it seems like the street is punishing names that aren't able to really have strong conviction in their outlook, and that seems to be the theme of Airbnb today, with shares selling off on the session.
All right, thank you for that. And then we'll turn the arrow around and look at a name like Roblox, which is gaining 5% today.
Roblox, which initially off the report was slightly lower pre-market, now we are seeing this rally hold on the session. So it appears there were more things to look forward to in Roblox's report, although objectively there were still holes here. So they did report their first quarter adjusted earnings, or losses actually, that were steeper than expected, fell 63% year over year. Revenue did increase to $655 million, rising from year ago levels, while bookings rose to about $774 million, higher than they had been expecting, at least the street analysts. Now, we saw average bookings per daily active user come in around 1170, which was flat compared to year ago levels, and users spent about 14.5 billion hours engaged on Roblox's platform, which was up 23% from the year prior. The CFO said they are now generating these high rates of year-over-year bookings growth, so they can now moderate the rate of investment in their headcount and infrastructure, therefore generating some operating leverage. They also expect some of these bookings that are processed now through credit cards and prepaid cards, which have a positive impact on their margins. So I think the fact that Roblox is showing signs of a more mature company able to generate cash in a more efficient manner is something that's seen very well, especially given the fact that Roblox has been in turmoil really over the last several years. We saw shares spike during the pandemic. We've seen shares fall off slightly, but now on the year, up 34% and up 74% from their 52-week low. So even though we're not near our all-time highs, not even close, we are seeing a nice recovery, at least on a year-to-date basis here in Roblox.
Yeah, without a doubt. I mean, the teenagers love it. So there must be something behind the madness there. All right, Jenny Horne, thank you. Markets correspondent. Appreciate it.